Good morning, my friends. It's December 18th, 2023, and you are in the Breakfast Club. My name is Darren Hancock, and welcome. We are literally 1 week away from Christmas. One more week for the big man in the chimney. Everybody else out there is going, what the heck? Where'd this whole big man coming down the chimney, whole thing start anyway? Well, I don't know, and I can't give you a history lesson, so that's the power of Google. All right. So markets are, I want to show you a trade I did this morning. But first, let's refer to our lovely friend YouTube and make sure that we're actually having a live session. And we are. That's good. And nobody yet is watching. Okay. If somebody turns up this morning, I'll show you now. What the hell? This is the power of making sure that you pick the direction that you pick. I want to show you a lost trade here that I could have nibbled a few $100s out of the market, but I didn't because where is that trade? I think it was in here. Let's find out. Yeah, it's right here. I think it was on the 1 hour. Is it 1 hour? No, it wasn't there. Yeah, it's right over here. That was another 1 hour. It was another 15 minutes. Sorry. So, I want you to kind of see this. This is what I mean by when you're looking for PD arrays, that you reach for the nearest PD array and offload, especially if you're leaving it to go to bed. Overshooting your PD arrays, my objective was way up here somewhere. But this is, you can see how I went in early here. Like right here. That's the objective I looked at, which is the mitigation block, because it does not break this old low here. That little piece of fair value gap, the bottom of the order block, or even the mean threshold would have been fine. Aiming for the higher rejection block right at the top there was right on the money. But needless to say, when you're aiming for your next PD array, this is Michael's classic example of pay the trader, because there's my entry. You can see a little pop in right here. There, and that's all I was initially aiming for. Then I went, yeah, and I just moved it ahead. So I moved it through 1, 2, 3 PD arrays. 4, there's a slight imbalance in there. 5, 6, 7, 8, 9, about not a dozen or so PD arrays. I overshot looking for greed up here. And it obviously came back and took out my stop loss, which is right here. See that? So I had to look at $200 stop loss. But this is the point. Make sure when you're reaching for your PD, the nearest PD array, especially if you're not going to monitor it, aim for the one that's the closest, that's going to give you a decent bit of profit, or don't even get in the trade, and then move to the sidelines. When you're not able to watch it, either trailing stop loss that thing up, or as soon as you hit your PD array, close out your trade. It's that simple. But I didn't. I let it. I tried to reach for higher PD arrays, and it didn't work out that way. And consequently, I lost $200. So, lesson learned, and I hope you guys got a little bit of that lesson from that trade. Aim for your PD arrays. Don't overshoot them. Don't put 10 PD arrays above. Oh, this is that trade we put on the weekend that I was doing. I think the risk was down here. We literally loaded in with almost zero risk, and if you would have left the trade on, you got 6. You would have aimed for this one up here. There's 6, 7, 8, 9, probably 9 R on that entry there, where it finally closed out. Would have came back and taken you out over here. You would have had 9 R. Crazy. That was that weekend trade I did on the 5-second chart, and we got like a perfect entry. So anyway, let's remove the drawings here. That's oil. Oil can be a lot of fun. Get in on oil early, you can get a nice little run on the day. Oil is a great moneymaker if you catch it right, read it right. But she will come back and slap you. As you can see, there can be a whipsaw, quite significant. It'll come back and clean you out. So that's why you have to reach for one premium PD array and close out your charts, or be there to monitor it heavily monitor it. So hopefully you got something out of that mistrade this morning. I was going for upside. This is totally upside, but that whipsaw back down at the London low. London created the low of the day. We have a consolidation. What I like to see now is this hour, in the next hour or so, for it to come back into a fair value gap here. I don't want to see it reach all the way back down into that consolidation again, the old highs. I like to see it just create a little fair value gap in there, tap it, and then continue on the upside, reaching for these 2 order blocks here. This is mitigation, so my guess is they're going to go for a breaker here. And that's another $1. It's 100 pips ahead of us. We may not get it. You may just continue 15-minute right here. That would put you right in the middle of that large up close candle there. Gold. I want to see gold come back. Oh, it did. Okay. Gold's hit these old lows here. They've come back inside this fair value gap, which is also the consequent encroachment of that consequent encroachment. I'll be right back. My wife's heading off to work. Let me go say goodbye. Sorry about that. It's the Christmas season. People are all busy, zipping around. All right. Where are we at here? Oh, yeah. So gold, we've come back to this consolidation. Now we're having a pull away. So I'm looking for gold to go down today. Looking gold dropping below these lows here. If you could, yeah, get back into this area here. I like these old original consolidations. So smart money reversal, low risk sell, accumulation, distribution, accumulation, all in here, and we should get another distribution level here. So I'd like to see this trade into this candle here today or sometime this week. We may just go sideways for the rest of the week because, hey, we're in the Christmas season, right? So you're not going to get a heck of a lot of movement, or you're going to have these big dramatic moves that occur during Christmas. So you don't know which way it's going to go. Very unstable. So this is a great opportunity for you to analyze the market and just sit and watch without putting trades on. Just kind of watch the market and learn from it. This isn't the time where you kind of just, it's boring. Well, it's those boring times you watch the charts, and you got to be in them in every market. Learn about them. See how they roll. What are we looking at? Yes. So Japanese yen, still equal highs, lots of equal highs up there on the weekly and the hourly, daily, and so on and so forth. On the daily inversion fair value gap, we've reached to the bottom of it already. Now we're coming back into the mean threshold, or consequent encroachment, I should say, of that SIBI inversion. So potentially more upside to at least into 144.97, 145, something up there. Australian dollar in December, it's leaving. It's leaving. All right, so I'd like to see us get back into this inversion fair value gap to get long on that for the rest of the year. It's now an inversion fair value gap on the daily. If we could get one more time back in here, those old highs we talked about up here are the next thing in play, and that's 200 pips away. Be a nice little trade for those of you who are in Forex, doing Forex trading. And why is that? That's strange. Stand by. They can't be that 13 minutes ago. Did I hit the off button? Nope. There we go. Sammy Sad. Thanks, man. How you doing, buddy? Sorry, I just saw your name on there. I'm here learning. Oh. Well, I hope you've had a good weekend, Sammy. And I hope if you're into the holiday season, it brings you much laughter and joy. Okay, so here's New Zealand dollar consolidation. We have a return to consolidation. This may be the only opportunity. I don't know. We have a we're into the top of it. Okay, so if we take this one, blow it up here. I don't want to see this. I don't want to see this order block get lost here. Oh, I don't want to see that order block get lost for a dip into this range. If we start to lose this one, then we're probably going to run these lows out. And then my eye goes to this little pocket here, which we've already filled. So you're coming back into that range there. If this one's got some momentum, I want to see us kind of drift out of here now. Again, we're in that type of seasonal flattening out of the markets. It just tends to do a lot of just drifting sideways. Or it does that dramatic takeoff, right? So we're going to be sniping today. If we catch something, we're going to be sniping. We're going to get in on really small little trades. Still got this as a downside objective in Canadian dollar. We're strengthening up against the American dollar now. It's about time. So we broke through these old lows here, came back and re-tagged them. See that? Old lows, bodies are on them. So now we want to see it continue pulling down. I don't want to see it driving all the way back up into here. If it's strong enough, we want to see it just continue driving into this daily fair value gap below the market. So in here, we're looking for a return into this breaker here, which we hit right there on the money. Inside there, fair value gap, midnight open. So if we hit the midnight open, which is near the body of the order block here as the breaker, then stop loss here, because you don't want to see this breaker give way. So stop loss goes really tight to that. You're in right off that open for a run down, and you could get, there's the 1 minute breaker right there, 1 to 2 minute breaker, so you could go as high as 133.81. 133.81 would put you right there in the mean threshold of that candle. So just keep your eye on this here, and if it runs up into here and you can catch that fair value gap off of here, you can get short off of that. And if you do get short off of that, simply take your fib tool, pull your fib tool from the low to the high, if that's going to be in here. Look for the 50% of that range or these equal highs here, and get out there. Or start scaling out there, and then your 50%, 62% for a scalable intraday 1 hour trade. So watch till it gets to here. If you get into that 1 minute or that 5 minute, go down to the 1 minute chart. And that was a 5 minute chart. Sorry, I said it was a 1 minute. It's a 5 minute chart. Then go down to the 1 minute, see what's in here. That overlaps 1 minute. If it hits it and starts to come off of it, go down to the 5 second chart and look for that setup that supports a break in market structure to the downside. Get in on the 5 second and short it. And then you'll have a, kind of like what we did on the oil trade the other day. Doing well. Can you chart MATI? Are you into crypto too? Oh, I'm not a crypto guy, but if it's algorithmic, that won't matter. So let me have a look over here. Let me see if I can find something for you. You want me to type in what? MATICUSTDT. Oops. This one here. Is that the one you're looking at? Did I hear 5 seconds? Yeah. Good morning. Did I hear 5 seconds? How you doing? Here's the 5 second master right here, Lori. Sammy, is this the one you're looking at? MATICUSTD. That one? Which one of these am I looking at here? The crypto one, the Polygon, or the Matic network? Pop up there in the chart. Tell me which one you want me to look at. Polygon, Tether, crypto coin, or this Beyonce here. I'm going to go with this one here just because, where are we here? Polygon. Let me have a look at that one. Ooh, Nelly. 1 hour chart. Crypto. I just saw some news today. They're touting crypto to go to $1 million again. They're screaming, crypto's going to $1 million. I have no comment on that. That might be some big crypto guys trying to pump it and dump it. The theory of crypto sounds good to me, but I don't understand how if everybody gets free money and they get to use money anywhere they go in the world, and they're not accountable to anybody for it, and then nobody pays taxes, and nobody maintains infrastructure, nobody maintains roads or anything like that. Yeah, governments, you can debate the whole corruption side of things, I suppose, but I don't know. Anyway, let's get back to this. I'm not getting into politics. So we have an order block here, right here. You broke that. Oh, sorry, my mouth's not working this morning. You validated this order block right here, and you validated that order block. We've come back to the top of it. We're pulling away. So the nearest upside objective is this guy right here. So you have the body and the threshold yet to reach for. So on the upside, I would say here is your upside objective for the day. That is the 1 hour, 15 minutes. Let's look for 15 minutes. On a 15 minute, you've got this fair value gap, which we're entering into now. So Sammy, if you are, if you're going to look at this crypto and look at this fair value gap here as providing support. If it comes up to this order block, hits it, and rejects off of it and starts to come back down, you've got this continuation on the downside going on here. If you get on top of it and it breaks this high and you find support in this order block here, continue to look for higher objectives like these equal highs here and that fair value gap there, and I will see that session open, the New York Open session. So my first objective right now would be to say this order block, you want it to hold price. If it holds price, then you want it to get through this fair value gap. If you get on top of that fair value gap, Look for this order block to and the fair value gap, which is now an inversion. Once you get through it, if the inversion fair value gap provides support, look for higher objectives here, 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 and then all this stuff up here. It's a 15-minute chart, so like I was discussing this morning about don't overshoot your PD arrays. Draw the range with your fib tool. Pull your fib from high, from this high first, from the open, and see how that lines up with that order block we were talking about. There's 50%. So if it just comes up to this order block here, rolls over, and the wicks do the damage, in other words, they come through this, tap that, roll over, and it comes back down again, you've got a continuation on the downside. If it rolls up, pops through it, comes back down, and you start to see a support at the 50%, and it starts to climb up. Your 62% is only lined up with the midpoint of that order block candle there, so there's an objective if you're going long. Again, I would only get long off of that order block there because you got a little swing point. We've now broken above it. Find support here. Look for a run to here. 50%. Small little nibbles because this is the time of season. Here. Look at 62%. And if you get through 62, then you've got this objective up here. Once I get through 62, I pull my stop loss to break even. So it's a zero stress trade. And then just wait to see if it pans out from there. Oh, I went with the polygon. Let me go back. You went to the Matic one, right? Very similar. Fair value gap here. Order block. Key off of that. If you revisit this here, if we come back at 10 o'clock now and revisit this low into this fair value gap, look at these equal highs here. If it tags those, you can go long there for this objective. If it's not hit, that guy. Or you've got a continuation on the downside still. So my two areas I'd be looking at is that equal high. Do you get some support off of that to continue up? This, ideally, this propulsion candle here, if you can stay off of this one here and continue climbing, get through that fair value gap on the other side, then I'd say you might have a bit of a switch to the upside and start looking for these higher objectives one at a time. And I'll let you pick that. So the same thing I was talking about on the Polygon one, this Maniac Network or whatever they call it, the Beyonce one, you can get in on that. Be careful. I don't know. Don't these guys usually have like a massive opt-in buy? Like, isn't the commission huge in these things? I don't know, it might have been an MT5 thing that I saw that on, but I don't know what your buy-in is on these ones, but look for that guy there and here. That's my first objective upside. If I can key off of that one and get that, I don't know how much that's worth for you. I don't trade crypto, but from there to there. And if you get through that fair value gap, start looking for higher ones and manage your stop loss pretty quick too. Because I don't know what this is like for whipping around and turning on you. I don't know the characteristics of the volatility of this specific one. So anyway, I hope that one helps for you. And let me get back to my US dollar. Oh, this is euro dollar. So I hope that one helps, Sammy. Warning all, of course, I'm trading, but in my demo, keeping yourself attuned to the markets Lori, I like it. I like it a lot. Okay, I have all these charts set up for old, just the regular NASDAQ. I don't have the contract months on there because I want to be able to look back. This is the lesson that Derek taught me last week, was to be able to look back on older data, and you could only do that in the futures market without the contract, so you can see further back. The contract months don't give you all the data because they're obviously new. So let's go into the actual contract months. Upside, upside. So we've got more wiki stuff. I think this is going to come up, give you a 3 wick day, and we're going to come back in again. I think it's going to get near the top, might pop through it, and then we get another wick close for the day. I don't know why. I'm just looking at that pattern. We have resistance, these 3 pushes that we'll have going up, and then if they rejects off the 3rd push up, 1, 2, 3, and then it comes back down into this order block one more time, which is the open on that order block, which is sitting at 116,775 or so. I like this old high here in the ES and Dow. What the heck is Dow doing? No idea what Dow's up to. Might be another up close day. We've had like 1, 2, 3, 4, 5, 6, 7, 8 straight days going up if today continues. I do like that little fair value gap sitting below it. I like to see it return to here at least to get long if you're going to continue to the upside long. Yeah, look for a potential wiki day today, for a wick up and then a drive back down. That's our opening. Let's have a look at the opening of the day. 15-minute chart. I think we have to start switching to the 15-minute charts for each, and then we'll see what's going on. So we've run out the London high and the Asian high already. This is before 10 o'clock. We'll run out the old New York high and the old lunch high. Finally cleaned them all out from last week on Friday. So I'll be taking out the New York high last week and then rolling over and coming back down into the range. My eyes go down into here now. I like this lower side. We have a gap supporting the lower side, I want to see this run up into here, clean these highs out at 10 o'clock, then go short back into this gap and potentially back into these lows again, keeping inside, extending this range just slightly and pulling back into this new range, creating a newer range here below these lows. brings us all the way back into this breaker here. Midpoint of that breaker. Cleans out all the lows. Just taps below these guys here. Keeps us in that mean threshold of that breaker. $15 more minutes. Let's look for 5-minute entries. Keying off this to go higher. If we come back into here, do we aim for those higher arrays with the New York AM session on Friday? Thanks a lot. Yeah, you're welcome. You sold NASDAQ. To go short, took 15-minute buy side. Sold NAS 5 seconds, took 15-minute buy side. You're selling this short? On the 5 second? Yeah, I'm with you. Coming back to the gap, coming in to fill the fair value gap there. Are you doing a quick trade on that, Lori? If you come at 15, where are we at? We're at the mean threshold of that order block, the consequent encroachment of that BISI there. That may not give you what you're looking for. You're looking for a full close of this? That may happen. They're probe. They're just not getting it. So if we roll over and come back deeper into this range, I like to see that get back into that regular trading hours gap high, or at least the consequent encroachment of that. Puts you back into this consolidation. Did you buy it, or in case it runs back? Yep, but in case it runs, I moved my stop. Good. Moved my stop. Lovely. Now we should see a nice little pop down into this. We've got this wick back. Didn't work. We got another 14 more minutes. So when you're looking at these right now, do you guys anticipate what's going to happen at 10 o'clock? So it won't be a nice logical place for the markets to run out at 10 o'clock to reverse, to go in the opposite direction. Or where's a place that we can continue to the upside or downside? What's a logical place I could key off of in the next 15 minutes to get a long or a short? Or pull back into a range. If you're on the top of a consolidation and you're just starting to clean out, like if 10 o'clock was one of these, you're down in here and you're saying, oh, you know, by 10 o'clock, if we clean out all these highs in reverse, come back into the lower part of that range because the sell side hasn't been taken yet, that would be a potential opportunity. So then once it happens, if it happens at 10, then you look for that 1 minute or 5 second entry, 15, 30 second entry, silver bullet, to get your direction. You must have your stop loss pretty tight then, Lori. If you're in a 5 second chart. Boom, there you go. You hit it. Hits the top of the regular trading hours. Now get right down into the mean threshold. To me, the first sign is when you run these highs out before 10 o'clock, it usually shows a sign of weakness. But maybe it's this high here, New York AM session. If we run up there, take that out, then before 10 o'clock. No sell side's been taken yet. It's all been buy side, taking that out, buy side's taking that out, buy side taking that out. And these old highs. So we might have one more push up to take out that. And then that would be, for me, it'd be nice to see that clear out this out for 10 o'clock and then come back to take this sell side out. But if this is the early weakness, we've taken this out before 10, then look for the sell side now to start to collapse. We'll see where the body ends up on that candle. I am on the March contract. Would be 16. Yeah, that's a March contract. And you're looking for 16,830. 16,830. Well, you're down here. Okay. Now I want to see this body, this fair value gap is still supporting price. I want to see that kind of break down and give you your trade low rate. So look for this inversion fair value gap to hold price or not to hold price. You're shorting this or are you longing this? No. Yeah, you want this to start breaking down now, get below here, come back, find some support at it to get lower. So there's your inversion. It hit the top of it right here. Well, actually, it's not an inversion yet. Until we get through it, come back to it. So we're kind of just banging around inside that fair value gap right now. I want to see this kind of whole price here to here. Now, though, we might get another, 4 wicks back up, half of that wick. Half of that wick, 75% of that wick. For weakness, we want to see 25% of that wick. This is good. Now we want to see that just melt into the gap here. Nine more minutes. This is reaching down into the gap. ES is not. This guy's not. You want to see that hold price down. Running for its lows. Took out those highs early. Took out the highs early. This feels more heavier to me now. Laura, it feels like you might actually have a really nice trade here if this holds out. I want to see that fair value gap hold though. What's the 5-second chart look like? Consolidation. Order block. The 5 seconds not in your favor. You got this order block here. It just came back up to mitigation. Now you want to see this rocket down. That's the order block you're looking off of there now. Good. Support. Continue down. You want to get below here. You do not want to start getting through this order block and these equal highs. This mean threshold, you want to give it up. Come on down now. There we go. Come on. Let's dig in through it. That's good. It's losing strength the more you bang around inside it here. And you eat both sides of it. It becomes a used up order block. So we need to look for a lower time frame one, which is right here. Sorry, a lower one. So eating it all up. Yeah, not looking good. You're eating through all these breakers and or mitigation block. Mitigation. Breaker. No, there's not a breaker yet. This guy is. Yeah. You got more upside on the 5 second, my friend. You want to see this kick out of here on 5 minutes. Go back to the 5 minute. See what we got. So now we're up through the rejection block on the 5 minute. So are they running for this New York high? That's the 10 o'clock objective. For a run back down into here, and then we start clearing out all this downside stuff. Are these guys coming back to just clean this up here? Hit your stop. Sir Derek, good morning, my friend. How are you? Do you have a good weekend? One tick profit. Take it, man. Take your tick. Take your tick and move to the side. Wait for the next one, lad. So these guys are definitely on the run for their sell-side liquidity. Filling that rejection. Again, I keep saying rejection. Sorry. Filling that regular trading hours gap we got sitting right here. These guys haven't even started filling that yet. This guy's running for the highs. Yes, did some visiting with family. I love it. That's why I got my family with me. They're here. We had a good laugh with mom and dad this weekend. I love hanging out with my parents. They're 80. My dad's going to be 83 this year. Next month, he's going to be 83. And they act like a couple of 20-year-olds. They're awesome. We're going out for a walk, and they're still lapping me. Here I am with all my back surgeries, and I'm slower than they are. I love to see their vitality. They said I don't feel 80. I think that's the key to life, folks. Don't be consumed by every little ache and twist in your body. You've earned it. You earned the right to be 80. You earned the right to get to the age, because a lot of people don't get there. It's a privilege. Is this good enough to prove that Michael is right in staying out of the markets? Dow goes down, Nasdaq goes up. It's crazy. Yes. I just want to see Nasdaq clean that high out at 10. Next couple of minutes, pop up there. And I'm just going to go on a demo. I'm going to go short. Just taking that out there. I'm going to try and turtle soup this mofo. And then my objective will be down here, offset the gap. Watch this order block here too. We hit another milestone the other day, you guys. We finally broke 100 people. Sorry, 100 people watched one of our videos the other day. 100, 3 digits. We got 3. Wow, I'm humbled. 100 people popped in to watch one of our episodes in the morning. We finally broke 3 digits, which was kind of nice to see. We got a higher subscription. We're up to like 69 subscribers now. Very humbling. Very appreciate that. So look for that 10 o'clock run. All right, that's 10 o'clock. Oh, we'll do the 5-second entry. How's that? As soon as that pops up above there, we look for the 5-second. There we go. Now we'll go to the 5-second, and we'll look for an entry at 5 seconds. Oh, I'll take that. I'll take that. Should have turtle souped it right when I said, but whatever. We're gonna go short on that now. I'm only risking 160 bucks. So we took out the high, come back into that order block. Oh, they're gonna take me out. They're gonna run me out. Not yet. It's not ready yet. So if we break below this low here, and then we can get short on that. Oh, Lori's going higher on the 5 second. You may be right. I wanted to catch a turtle soup here, but looks like you got the 9:59 and 55 seconds. He got long here. Oh yeah, you're cleaning up house, man. Go, 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 go. I have no breaking structure. This is definitely Lori's trade here. Let's go to 15 seconds or 30-second chart. Looking for a silver bullet entry here now. Still a weekly fair value gap price above. Good draw on liquidity. See what the next few minutes gonna hold for us. Let's go back to here. Let's go here and put a 30-second chart on and a 30-second chart on. Oh yeah, if you start get back down into here, that's the silver bullet entry right there. We get into here to go long. There's 9:59 and 30 seconds. For if we return into here, there's no other fair value gap on the 30-second. Right here is the 10 o'clock hour candle right on the equal lows. So that's a potential fair, that's a silver bullet here. And a silver bullet here. You're practicing closing your charts the next day. That is a mindset, man. I like it. You got to do what you got to do. Thanks, man. You have an awesome day. You're not doing any firefighting in the next day or so, are you? If you are, stay super safe, my friend. Super safe. My thoughts are with you anytime you go into a fire, man. Stay focused. I want you to come back. That's always a great thing to do. That's a double whammy there, Derek. If you cuff your hands behind your back, you know, a woman that knows not to lose an opportunity, to take advantage of an opportunity when she sees it, good for her, smart woman. I'm so jelly. Find the one. Nothing. This is when you start to see all the viewers starting to peel off. I've had enough. I don't want to watch this. I wonder if Sammy got his trade. He's looking for crypto. Did you see in the news they were talking about crypto going to $1 million again? I love the way they're pumping that thing up. Every once in a while you get people screaming, crypto's going to $1 million, and then it comes screaming back. It's going 100,000. Then it comes screaming back down. I think every time they give that news, the crypto is going to bust $1 million, and then it's the big boys trying to unload their positions. Sentiment drives the market, my friends. I'm going to have a quick peek over here because that's not doing anything right now. I'm going to take it off of this guy here, and we're going to go take this one here and go. I just want to see what crypto Bitcoin looks like. Bitcoin looks like it's filled that fair value gap right there. Reacting off of that fair value gap. Also reacting right off that breaker mean threshold. That's that classic short the crap out of this thing, right? When you have a breaker inside a fair value gap, you return to the breaker inside a fair value gap. Mean threshold. Short that. Now I take the range from here to here and I look for 50% of that. I'd aim for down here. So while everybody's calling for $1 million on Bitcoin, well, this is Bitstamp. That's not Bitcoin. Sorry. If I was looking at Bitstamp, if I was trading Bitstamp, everybody, I'd be looking for 50% of that range. It's just created right here. And what's sitting at 50% or 62% right in here? Old highs, inversion, fair value gaps, all that kind of stuff. So that's not Bitcoin. It is Bitcoin. Ah, there we go. Same thing. $44,000. So, in order for Bitcoin for me to get hot and heavy over Bitcoin, you'd have to break this high, or at least break through the threshold of this candle here. It's not even validated yet. So inversion fair value gap over here is holding, that hit the, filled the fair value gap, came back down. Now we're trading below it. So if we trade below it, come back into it, which is the midpoint of that candle I mentioned, we'll start getting back into here. So I see Bitcoin coming back down into here. Or draw your fib tool from top to bottom, take your 50% of your fib, look at that and see if there's anything in there that supports price. Or you want to get long on it, find out, I want to see it come back and find some support at this level here. Or come back to that fair value gap, fill it, come back on top of it, and then start to work through this order block here and these over here. That's my my call on Bitcoin. How's that? Oh, that was that. Let's go back to our regularly scheduled program. Which was Japanese yen. Cue the elevator music. Aha, here we go. There's that fair value gap we came back to, so you could technically go long here on that if you're pulling a, yeah, let's do that. We'll go long on that. Right inside that guy there. Boop. And we'll put our little stop loss down in here. Oh, that might run that guy there, so we'll do that. We're inside that fair value gap here. We're at 14 minutes. So this will help me recover some of the loss I took earlier. So that's your silver bullet entry we're taking right here. And we want to get a chunk of change out on these lows. There's 160 bucks. That gets me my my money back for what I lost earlier. So we come back into this guy here. Look for that fair value gap up there. There you go, fair value gap. Now you could just continue up on that one. I just wanted to get my money back. So that's the 11. So this could this is where I can go either way. Flippity floppity now. And I've run out the New York high, which was right here. Or is that the open? Go back to 15 minute here. That was the high. So this is potentially the turtle soup that I was trying to get. We took out those New York session highs from Friday. But like Derek was saying, you have these weekly, oops, wait a second, here, weekly fair value gap. Is there a weekly one? Is it from a different century? Derek, where's your weekly fair value gap? I can't see one here. And I'm in an old chart. I'm not even in one of those new ones. Monthly. Yeah, I see nothing back there. This is like new highs for the last 20 years. I don't see any highs back there. So I don't know what fair value gap you're looking at. I'm sure you've got one in there somewhere that I can't see. Let's go back to our 30-second chart here. Look at that, right off that silver bullet. Beautiful entry. Now, fill that fair value gap there. Do we roll over and come back down? Which my guess is we're probably going to do. You could say log into your broker. Paper trader. Okay, we're well through this order block now. Well through those. More upside. NQ1. December 27th, 2021. December 7th, 2021. NQ1. Yeah, I don't have anything back there. Nothing. Just NQ1. Nope. There's no valid symbol for NQ1. NQ. You got better data than me, I guess. NQ1 exclamation mark, I've got that. I go back to the weekly on the 20. Oh, here we go. There's 2021. There's nothing up there. We're above that already. November, what were you looking at? December 27th. This one to this one. Ah, you're talking about like an inversion fair value gap. That guy right there. Yeah, we blew through that there. So if we come back to the top of that and get support, because we're making new highs here now, right? Wouldn't that be nice if we suddenly started turning here at the end of the year and started eating back into this? That would be an awesome place to get short on. Let me just look at this here. Where was this? The open? Oh, that is the high. We're above that. So we have made new highs. 1 hour. They've taken those highs out. 15, 5, 1 minute. Oh, I'm still $50 short. Look for this guy here. The Breakfast Club, let me see. Oh, that's an excellent Lauriston. I love that entry, man. Derek, why is yours showing higher? Mine just shows we've blown through all that already. Wow. I was on the NASDAQ, E-mini S&P. One week. Wow. Yeah, I don't have that on mine. I'll try to find it on there. NASDAQ. NQ1. Yeah, there's 2021. We're not even close. There's nothing there. So it's not saying. Wait, let me. Yeah. No. Whatever you're seeing, Derek, I like it. If that's an objective, that looks great as an upside objective for sure. Let me get down into that 1 minute again. This is what happened for me to take my trade this morning. Entered. I like it. Yep. Darren's feed. I can't see the title on the left as it's cut off. Let me open this up so you guys can see this a little better. That should be a little easier for you to see. Yeah, you can see up there in the corner, I got NQ1 exclamation mark. That's the one I'm looking for in there. It appears you are on the wrong instrument. NQ1 goes far further back because it contains history. Well, I'm looking at your NQ1 exclamation mark. NQ1 exclamation mark. That's the one I've been going back on, and I got nothing back there. All right, so lots of equal highs up here. We've come back into a 50% of this range here. We've hit 50%. We've tagged it. We're on this order block here and that guy there, or this guy here, I should say. So we're between these two. If we get one more little run into the discount off of this guy here at 62%, and then run these equal highs out, that would be an objective to run for to get the highs. If we lose that threshold right away, we might be running these highs to get back down into running both sides of this range, this little consolidation. So if you want discounts, and keep your eyes on discounts and premiums when you're in consolidated ranges like this. There's a fair value gap down here, so wait for an extreme discount before you start running for those highs. And that mean threshold, you want to see that hold price. If it just comes back up to the rejection block once again, creates an equal high, that's a lot of liquidity right there, like that. Now are they going to pop above it and run it, or are they just going to turn around now, come back down into a deep discount? So for me, if they hit that and that stays there like that, and they don't run that out, yeah, it looks like they want to pop above it. There you go. So now if they run that out, look for a run below here. So you can get down into the 5-second chart now and look for an entry that supports a reversal. If not, then this continues on the upside. You won't see one there. You'll just see more support for continuation on the upside. So no body getting above these highs. I like to see bodies get above it. So this is a price or a stop run just on this stuff up here. So I want to see a body get up there and then find support on top of this to go long for S&P. Dow's finally ran out its lows before London. Now it's come back into the middle of that range again. So Dow's not fun to play in. The cleanest price action right now looks like it's on the these two charts, Nasdaq and S&P. So again, we have a body respecting the highs, wicked above. Now you want to see this run back down below this, and your stop goes above that if we get below that candle. I want to see us get in. Actually, I want to see us get below this inversion here to get support going down. So right now we're finding support at the top of it. See that? Bing, 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 bing. It's bouncing off the top of it. So if we continue to get support here and you have further upside, look for the furthest down that you can get is into this guy here, which is what that wick is doing. It's dipping in there. Validates this is an order block now. Good, so this was just a stop run here. Look at that for support. Look for this guy down here. That's the support you're looking for. Now if it just rolls over, we're still inside this inversion, so we can get inversion support and push through this. You want to see this order block give way, then if we're going to drive through it, that needs to give way. If it holds price, look down here. So far, everything's supporting price. Back into this guy again. This isn't validated yet. We're still inside this inversion. So here and here. We need that to hold in order to get back to here. If not, that thing there is supporting price still. So look for your narratives when you're looking for support on up or down. I'm not going to tell you up or down. I'm just going to kind of tell you the areas that we're looking at that are providing support. And if they give way, the next level they're looking for. So we need that one to give way here to go to the upside. Then you got rejection block and wicks. Coming back to the top of the inversion again. Right there. Now you find support at that. Looking to leave here. If you're long. I hate this consolidation bouncing around in here, so I wouldn't touch this, but we're just looking to read price as it goes right now and see how well it supports the narrative of each order block. This is just reading the charts on the 30-second chart, just reading price action. This is how I practice reading price action, is watching what areas are providing support and what aren't. So that when you see this on a 30-second chart and it's ticking along here, you'll see whether you're right and wrong. And then if you're wrong, look back and say, oh yeah, I missed this one here, or I missed that one there, or whatever. So practice reading these, because when you get into a monthly chart, you can take your time. You've got plenty of time to decide whether you're right or wrong. But you start practicing down at these levels, you'll start to see it clearly where you want it to go. Okay, so let's see that mean threshold right there. Bodies are respecting that mean threshold still. And we're back into that inversion again. Here and here. So with that guy right there is holding back up. This is supporting price, so that's why you're going sideways in here between that guy and this. These inversion fair value gaps here are supporting price. So if you want to go down, we're still looking for this guy down here. That gets validated right in there. We pop back up into it here. Now you're looking for a drive down into here. So that guy and that guy still holding price. And these inversion fair value gaps now, that guy there is giving way. Got a body below it. We're inside this guy here. And a body's just, if this closes, we've hit the order block that we were looking for, the 62%. And this order block here, we're into the midpoint of that. There's the threshold. Now does that provide support? Let me get this out of here now. Mean threshold. So mean threshold holds, mean threshold holds. So now you're stuck between these two. We've got to extend the range now. Up or down, or just keep going sideways between these two candles. You're welcome. You're welcome. You're welcome. So you see how that threshold is starting to give way? Not a breaker, right? Last down close candle does not break an old high. It's the weaker one, so it's a mitigation block. It seems to be the weaker one. So if that gives way, look for a run below here, here, and look back for this guy back in here for an extension of that range. And mitigation blocks are nowhere near as strong as breakers. Look for the mean threshold to hold. We have rejection block. We just bounced off of there. Now, if this holds price, look for the opposing PD array on the opposite side. So what is that on the opposite side? If this one holds, think I'm in a discount. I've just hit a specific array. Always look for the opposing PD array. Where's the potential for this to run to? Well, the rejection block on this side, if that holds, then with the opposing rejection block on the opposite side, is back up on this guy here. Well, we have a swing point, so you could say it'd be there, off that guy there, or this highest up close candle here. But we have to wait to see what happens here first. Does this hold? If it doesn't, and we run the lows, then look for an opposite side to run the highs. So with the rejection blocks holding, lots of liquidity sitting down here now. We've run all that liquidity out at the top. So are we going to run the liquidity out at the bottom? So if this was the run up, clean that out, you'd look for a run to clean the low out now. And potentially get back into here. That was a PD array on the upside, ran the upside out. Now we're coming back, slowly working our way back down, so we want to run out the low side here now. It'll happen. Give it a few seconds here. Then you look into that PD array here, equal lows, and that small little fair value gap sitting right there, which is in the premium portion of the next rundown. If you're going to support price going down, that is. So I want to just see the bottoms get taken out here. So we've got top run liquidity above, run liquidity below. So they're pairing the liquidity up on the buy side with the sell side with the buy side. These orders are going to be paired up with these guys down here. And if they don't want to take these guys out, look for me, I wouldn't want to see this run back above these highs. I think they will come back into a premium level one more time before driving it down and taking these guys out here. So your premium, if you're looking at the little range right here, if I was going to take a premium off of this before running them out, 62% puts you right there, right in line with this. And did we take the lows out there? What's the low on that candle? The low is 86.25. The low on this one is 86.25, 86.25. So they're equal lows. So run back into the premium. Is that the inversion right there? It is. That's the inversion fair. See that fair value gap here? We work through it. We get a body through it. You come back, find support at it, right there. So even though it's short of the premium discount, it is an inversion fair value gap that provides a level of support. So if I was analyzing this and I go, oh, why didn't it hit the 50%? Well, we have an inversion fair value gap here. We've come all the way back down into this order block right here, the mean threshold. And now do we drive right through to get the 62% premium for the run down below the low. So I like to see it go up and then drive all the way back down. Basically, we've got this order block here now. I'm trying to jump ahead and jump behind. There's your order block. We've broken below it. We've come back up, traded to it right there. If we continue down, that was the order block there, and that inversion fair value gap held price. And we didn't get the just short of the premium we were looking for. And it's still sitting on the equal lows. It's got a pop below there now. There we go. Just short of that premium rate. I didn't see this here until it equaled out. I was like, oh, well, why did it stop there? Ah, right there. Inversion fair value gap. Beautiful. Then it finally took the lows out. So that's all the only premium, which wasn't really a premium, it was a premium inside of a discount range. That's all it needed to drive that price down further. Coolio. Alright, so we're looking at that fair value gap down there, and we're in it. We tagged inside it, we ran that low we were looking for. So now we've extended this range with a whole bunch of little candles. Now you're going to say, now we got to look for the discount or premium. So if we're looking for a premium now, where would we find it? $70, 75%, sitting right up in here. We're between this order block and that one now. On the larger range, that would still get us into a discount above 50% inside the larger range we've just created. We've expanded. So anything above here is a premium. Order block, come back, find support at it. This is your inversion fair value gap again, right there. To be bullish, I want to see it get above that and through that. Otherwise, it can dip all the way into that, clean this out, liquidity out one more time, which is 50%, just over 50 to continue down. I like to see this one run right up into here one more time and then get short from there. Oops. Sorry, let me pull this down a little bit more. There we go. So you come back to the 50%. I did not that quite pulled down far enough. Very nice. If you take the swing point up here, that was 79% retracement, or 75% retracement, right on the money. 70%, just short of 62, and then continuation. Sometimes I don't have my fib in the right spot to get the short range that we're on. You'll look at any time there's a swing point, that's the small little range you just created, and we come back inside of that. Look for your fib tool to complete that turn. So, for example, if that's the swing high, that's the swing low, look for, so premium discount above 50%. They're back into a premium again before extending the range. Let's kind of go through some of this. This is a US Dixie. We're calling for 101.93 last week. We hit it nicely. Now we're back inside that breaker. We're inside this breaker. Above that high. Now, are we going to get short here? And is it going to start to roll over and come back down? We're through that breaker. We ran back up into here, so I can clean this guy out. So we're looking at this one here. Last down close candle before run above these highs. We're inside that guy right there. Now do we key off this and start coming back down, driving down into this little imbalances and stuff that are down in here. I want to see that stay open, or at least hit the midpoint of that breaker, which would take out that imbalance there. So if we did do another run up into here, that would be like a Tuesday high, and then roll over and come back down again. Tuesday, Wednesday high. If that were true, then we'd have a push down into a daily fair value gap, run these lows out. Make that a little bigger. We're inside that fair value gap now, filling it on the daily. So if the American dollar now starts to turn like we were looking at, it's sitting on a very key level for turning. That's sitting on a key level for turning. So we could see this fill and then start to run back up again now. So look for this level that's just been hit. It's also the New York open session, also inside that order block on the hourly. So get down into the 15-minute and the 1 minute and look for a setup that will prove that's the reversal. So on the 1 minute, look for a break above market structure, consolidation, like I'd like to say a bold candle here, come back down, fair value gap, and start running back up. That would be my 1 minute confirmation that this is the potential turning point. And then look for your 15-minute and 1 hour objectives to get out at. So look over here for your so I'm still on my chart. Laurie, I thought you closed her down, man. It's discipline. I'm still long. Okay. Bless you, man. You just love the charts. You're addicted to the charts, my friend. We love candles. You know, all those women out there that said men don't like candles, it's just not true. It's just not true. I adore candles. These ones just don't stink up the house. Euro is doing the same thing. See how it's come down all the way into that rebalance of that candle. We have potentially another downside to go yet. 50% of that range is still here, so we have the potential to run down some more. Euro CAD. Euro CAD could come back to the edge of that fair value gap there, which is the bottom of that candle right there, and then we'll start running back down again. New Zealand dollar, I think I wanted back in here, didn't I? Yeah. If we could just dip in below these lows into this one more time, that would be the potential long for me. And as for New Zealand dollar, get back into that daily fair value gap here. One more time for a long on Australian dollar. And these guys, if they're sitting right at that inversion, there's an inversion fair value gap here. So if we bring up price to the bottom of that, roll over and come back down, you see further downside on Japanese yen or American dollar, strength of Japanese yen. Oil, my beloved oil. I do love oil. If you go into a 5-second chart in here, or a 1 minute chart, let me just go into a 1 minute chart here. You'll see where that turning point was. Consolidation, breakout. In here, as soon as you see this breakout occur, go down to a 5-second chart and look for an entry in here. So that's the impulse leg, right? So let's go to 613. 30-second chart, 613. There's your impulse leg. Now that's 30 second. Let's go to a 15 second. I'll slowly start chopping it down so that you guys can see it. 6:13. There's your impulse leg. 5 second chart. I'll make sure this is moved over a bit more. 5 second chart. $6.13. See that impulse leg? Boom. So you see, as soon as you see that, look for a return into your fair value gap. You don't even get it on a 5 second chart. So you wait for the next impulse. It comes back down, and you don't even get it there. I'd say in here is where you start to see it. Drops back down into here, anywhere inside that fair value gap there. Be waiting a lot of 5 seconds before we have any fun. It's a lot of 5 seconds of sitting. But your impulse would have been, or you would have got in on the 6:15, 6:16 candle. So what does that relate to in terms of the minute? 6:16 candle. 13, 14, 15, 16. So right there, you would have got in on that guy. So even on a 5 second chart, you wouldn't have had an opportunity to get in on any of that. Until there. So that's just looking for your entrance. I like it. I like it. Go long here. Is there potential to go long? I like the idea of getting back into these old. This to continue down, get back into these old highs here, leave that open, reconnect with these old highs. I think that's where I'm going to draw my line for oil. I want to see it get back into here. Or we'll just put it as a fill of that fair value gap with the potential to run down to the bodies, which is also in that little piece in here. And then continue on the upside for that objective up there. And then there's a lot more objectives up top. So I like to see it retrace back down into here, get long from there, calculate your stop loss sitting down in here. It's almost a, that's almost $2, dollar something, $1.60. Actually, you could probably put it, if you're wrong, I wouldn't want to see it get back into here. If I was wrong, keep your stop loss tight. Yeah, I would want to see it take there. If it comes back into 50% of that consolidation, that might be the next entry, but basically look at that as your breakers right here. These two candles here. Yeah, I like the return to that. If you don't get it, then it's a much stronger market. We're looking for those highs up top. What's going on over here again? Meanwhile, back at the Bat Cave. We are back into a mess of consolidation again, and welcome to Christmas. If you actually put this on one of those little machines that go pling, 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 the little open up your music box, if you play this, this is Jingle Bells right there. If you actually turn each one of these into the wire things and pluck the chords, that's Jingle Bells or some sort of Christmas tune. You're still long on NASDAQ. Eesh, my goodness. You're long on NAS. You're long on NAS. Well, you're a brave man. You're a brave man, Laurie. Well, that's it for me, folks. It's 9 o'clock, and we've done a bit of reading. Hopefully, you got to learn a little something today. If it helps, great. Hit your little like button. If not, no big deal. This is just my ideas of what I'm reading. Doesn't mean it's always right. But as usual, it's this festive season out there of loving and caring for one another. Don't forget to share the love and the friendship with people you don't even know. Say hi to somebody you don't even know. Make somebody smile you don't even know today. Make somebody laugh. A total stranger laugh, and you've justified your day. Thanks for sharing your time with me today, folks, and I will see you again tomorrow. This will be the last week until the new year. I will be off the air until January, or if I see something kind of fun in here, I may pop in every once in a while, but usually I think I'll take the rest of the year off and get her started back again in January. I'm down in LA on the 13th or 15th, I think it is, till the 18th or 19th. I'm down there for 5 days. So I will be broadcasting from California in the new year for the first little while. So I wish you guys a very happy day, and I will see you again tomorrow, and we'll see what else we have left in the markets for the rest of the week. All the best, and you are welcome, my friend. You take care, and Laurie and Derek, you guys can still get me on the Breakfast Club on Skype. So I'll talk to you guys tomorrow. Take care. Have a great day.